We're going to have some of these white knuckle moments, whether it was Iran, whether it's rates, especially Warsh coming in, but it just continues to be the risk-on trade because this fourth industrial revolution, like we said, it's top of the third inning, one out, and that's where we are. And I think you're going to continue to see these dips get bought.
Dan Ives just said something that every investor needs to sit with for a second. Third inning. We are in the third inning of the AI revolution. And people are already acting like this trade is crowded, like it's too late, like the easy money is gone. It's not. Think about what the third inning actually means. We haven't even seen mass enterprise adoption yet. We haven't seen AI fully embedded into every layer of the global economy. We haven't seen the infrastructure build-out reach full capacity. What we have seen is the opening act, and Nvidia is about to step back on stage. The street's numbers are already being called underestimates. Demand for Nvidia chips is running 10 to 1 over supply. That is not hype. That is a structural imbalance that takes years to correct. So before you tell yourself you missed this, you didn't. But the window to position intelligently is not going to stay open forever. Subscribe and stay to the end of this video. I'm going to break down exactly what this AI rally means for crypto, which risks could actually derail it, and what the smart money is quietly positioning in right now. Don't leave.
Why do you say especially with Warsh coming in?
Because I think there's just worries, him coming in, what does it mean for tightening, worries about rates. If you look at just like when any time a chairman comes in, what the stocks do over the next 3 to 6 months. So there's definitely nervousness. The bears will come a little out of hibernation mode, and you'll see them scare some of the bulls. But the reality is that we are still early in this trade in terms of AI. We'll hear from Godfather of AI this week, and that's going to be just another important data point in what we see as this plays out.
Just move your stops up a little bit. I think you need to be a little bit nimble. But I think Dan's spot on. I think the market's going to go higher. I think he's right that the tech trade is still very much alive, and I think any pullback is viable. Our target was 7,800 on the S&P. It looks like we're going to get there by midsummer, and 8,000 is in the sights.
How would you be playing the tech trade right now, Vance?
I would be nimble, but I would be long tech. I'm very bullish on it, and I can't see tech going. I think we're going to get a pullback here, maybe 3 to 5%, which would actually be a gift. It would give us a chance to add to some positions that we like, put some capital to work that maybe we've been sitting on cash just a small amount, and I think it'd be a good chance to take the opportunity to buy some great equities.
I do want to dig a little more deeply. Yeah. Oh, go ahead. Looks like you're ready to go here.
But I was going to say, I think Vance makes phenomenal points in terms of these dips get bought. Look what we saw in March. Everything we've seen from our checks in Asia, from Taiwan, show demand and supply 10 to 1 for Nvidia chips. You've seen it from AMD, TSMC, just go across sort of the food chain. And I think this is really going to be another breakout moment relative to the AI trade. I think investors are still, especially when it comes to physical AI, think about the China trade, when think about H200s, that's not factored in. And look, the Godfather of AI speaks. You'll hear a pin drop on trading floors because that is the most important thing in this market.
Vance, we also have a market that seems to be continuing to shrug off geopolitics here. For the most part, yes, we're seeing the move higher in crude oil again this morning on the comments, and this idea that maybe perhaps you see a re-escalation to get to de-escalation, given the loggerhead we continue to see in the Middle East right now. China summit seems like a little bit of a nothing burger, dare I say, at least based on the information we have publicly. What matters to this market going forward? How much of this is Nvidia? How much of this is a SpaceX IPO? How much of this is something else?
Well, I think that the nothing burger is a good thing. I think that nothing really coming out of China, I think, was probably what was kind of healthy, because I don't know. He went over there with an agenda. Maybe he met the agenda. We don't know. But, I agree with Dan. I think Nvidia is going to go higher. I think that the trades that we're looking at are very, very positive. I'm really bullish on the market, but I think one caution that really throws caution to me is where the 10-year Treasury yields were headed over the past couple of weeks as they've headed higher. Is this an inflection that inflation's coming back? We sort of poo-pooed it last time that it was transitory. Well, maybe it's not going to be transitory this time, but this energy effect, the cost of energy going up is getting to be a real deal that we're going to have to deal with. And it is the supply and demand issue, but energy is something that needs to be looked at. Inflation still needs to be looked at, and this 10-year Treasury yield going up needs to be looked at. So there is some caution that needs to be taken here.
Affordability versus AI. This seems to be the nexus of the tug-of-war for investors here. Finally, Vance, I just want to get your thoughts on some of the names that you like here, because they're names that have already seen some pretty strong moves, but also I think arguably speak to the secular growth trends that we're talking about, whether it's Micron or Rocket Labs or even Cummins on the industrial side with AI build-out.
And, and if you're looking at engines like Cummins, I think that's going to be a great play, especially for these data centers and what's going to be needed. But, you can also play it with an ETF, PAVE. They've got sort of a combination of different infrastructure stocks that are going to benefit from these data centers that are being built, everything from Caterpillar to Cummins engines to, concrete that's going to be needed. So I think there's a lot of great opportunity out there that's going to take place.
Bottom line, the AI trade is not over. We're early innings, yields are the wild card. And Nvidia is the heartbeat of this whole thing. If you're in crypto, you need to be watching AI because these markets are merging fast. If this broke it down for you, hit subscribe. I drop this kind of analysis every week so you never get caught off guard.